Hey everybody, it's Abdullah again. Today we'll be going over how to pick halal stocks. And you might be asking, what does halal mean? Halal is something that's permissible within the religion of Islam. And you'll also hear the word haram within this video, which is something that is not permissible within the religion of Islam. This might not be relevant for some of you watching this video. However, I think everybody should take into account moral principles that they go by when investing in stocks or in any market that they partake in. And these give a good solid foundation for principles that you could use. You might be able to shift them around if you don't follow the religion of Islam to be able to create a moral compass when you're investing in companies based off of what you believe in and what you hold to. So today we'll be going over some of the different markets out there, be going some of the different assets that are you're able to trade and derivatives they're able to trade out there. In addition, we'll be going over some of the principles when it comes to how to pick halal stocks, resources and scholars to be able to reference if you do have questions. So as far as different markets out there, we have fund market, the asset market, and derivatives market. Most of the derivatives market are things that are not able to partake in, whether it's futures, options, short selling. These are things you want to avoid. Options in certain limited cases are able to be done if they hedge certain risks. However, for a typical investor, these aren't applicable, so generally try to avoid them. Personally, I stick to stocks and ETFs. These are things that I'm familiar with. However, you're also able to trade when it comes to commodities, precious metals, as well as foreign exchange if you're well versed in it as well. Today, we'll be focusing primarily on rules when it comes to stocks and ETFs. So we're going over some of the rules here. We have them listed, which are the core source of revenue that the company derives its money from. You always want to make sure that the not permissible portion of that is less than 5%. Some opinions go up to 10%. However, the opinion that I follow is 5%. However, you want to be able to go to a company that has as little as possible when it comes to not permissible income, whether that's deriving income from alcohol, gambling, etc. The second criteria is liquidity. This is a rule I generally don't use when it comes to how much cash equivalents, and accounts receivable a company holds. We have the equation there and how to be able to calculate it. This is a principle, even Zoya, which is an app that helps to identify stocks that are halal or follow the Islamic principles. They've taken it off their app. So this is a criteria that I generally don't use. The third one is interest income, understanding how much interest income the company derives. We have the formula again there. Generally want to make sure that it's less than 5%. It's tough to be able to find any companies that have 0% in any of these criteria. So that's why there is some flexibility to be able to give investors and some investors bandwidth to be able to invest in certain companies. The fourth criterion, probably one of the most important that you'll look into, even Warren Buffett, when he's trading, he tries to look for companies that have very little debt because he wants to make sure that the profits that the company gets go into his pocket rather than going back into paying debt. So generally you want to make sure that the debt ratio is less than 33%. And there's a couple different ways to calculate this criteria. You could do debt to equity, which is basically looking at the company's debt and you divide that by the assets of the company minus the liabilities of the company. A second way is to be able to take the debt and divide it by the company's market cap. And the market cap, obviously, in many cases, is greater than the equity of the company because the company might have a lot of liabilities that's accumulated. In addition, some of the accounting policies have changed where you have to include, for example, leases in debt, which generally I wouldn't include and I would subtract out. However, those type of things might make the equity of the company a lot lower than what their market cap is. The next thing is more of a concept. Making sure to always keep in mind to purifying your money. That, if you generally see that you're investing in companies where 5% of the income is derived from impermissible sources, to be able to just donate 5% of the profits that you're getting from the trades that you're making. And the last thing is with regards to margin trading. Some people might partake in it. It's very risky. However, the only time you're allowed to trade with margin is if the next criteria is margin trading. Margin trading can be used in certain circumstances and specifically only when you're day trading, because in those instances you're not holding the cash overnight, and interest is only charged on margin accounts when you're holding the securities overnight. However, again, this is something that most investors won't partake in, and I wouldn't recommend margin as it's very risky, and in most cases it's a losing game. Sources to be able to use, scholars that I like to reference to. One is Munzir Kef. He has a great website where he has a lot of different questions he's answered about mortgages, marriage, divorce, lottery, gambling, and then he has a section on shares, stocks, options, and commodities. So he's definitely somebody that I reference to, and he has a lot of questions that he's answered in the shares, stocks, futures, bonds, and options space. And you can definitely Control F, find what you're looking for, and you can look through the questions that have been asked of him thus far. And if there's a question that hasn't been asked, you can definitely reach out to him and be able to ask the question that you have. In addition, Joe Bradford has a lot of great courses as well as articles on his website, as well as somebody who's more modern in being able to understand the current situation when it comes to the stock market, as well as new asset types such as cryptocurrencies, etc. So he's as well somebody that I reference to when I'm looking into these things. Lastly, I wanted to just be able to show a resource to be able to get some of the calculations that we talked about. For example, debt to equity ratio here is in Yahoo Finance, going into the statistics section. In addition, you're able to look at, for example, in this case, total debt for Apple, and then also be able to look at the total market cap for Apple, which currently is 1.89 trillion. So you can see that that 33% metric is met in the case of Apple. They are not above that 33%. They're far below it. So you're able to invest in Apple. So these are some of the things that I look into when I'm considering how to pick halal stocks. There's definitely different opinions out there. Ultimately, you have to make the decision and the judgment call based off of the information provided, referencing scholars, and then also your own moral principles to determine what's halal and what's haram. Safe pickings out there. Make sure you keep investing, and let me know if you have any questions. As always, make sure to subscribe, like, and if you have any comments, make sure to comment below, as well as any questions, and let me know what your halal stock picks are. All right, take care. We'll see you next time.